Hello and welcome to today's Dalal Street Week Ahead video. Now in today's video we'll take a look at two Adani stocks plus the Midcap Nifty since it has expiry tomorrow. Before that we'll take a slight look at the news which will be affecting our markets this week. Now coming to the news front, this week on the international news front, the main data which is coming out is for the US economy. The Fed minutes are coming out and there are the new home sales and everything coming up, but I don't think those are significant. The only one which will affect our markets is the Fed minutes. So as that will tell what was the logic behind the last Federal Reserve meeting, and that will give a bit of a pace to the whole thing. On the domestic front, everything is going to be based around the Maharashtra elections. And also one thing I've seen is that most of November have taken off, but October selling in the market was very high for foreign investors. In November they continued the selling, but the selling has been lower than what they did in October. In October they basically withdrew around 95,000 crore, and so far we have reached the latter part of the month in November and they have not done to that extent as what they did in October. So that's a bit of a relief for the markets, and it's a bit of it's a reason why this month has not been that nasty for the Indian market. So that is it on the news front which I believe will affect us. We'll first take a look at the Midcap Nifty, after which we'll take a look at Adani Enterprises and then Adani Green. Now when we come onto the Midcap Nifty, I've drawn on the levels. Now the Midcap Nifty is currently at a bottom and is trying to form a bottom basically. Now due to how the Maharashtra elections have gone, there's a higher likelihood of us trying to rise than trying to drop right now. But us rising will be dependent upon certain factors naturally. And the big question will be whether the Midcap Nifty rising will be able to sustain itself once it rises, or it will just be, it will tap the top of these resistance levels and come down. But that will mostly be decided by the volume build-up indicator plus the trend catcher indicator. These two will gauge once we reach those resistance levels. Number one, is the trend still bullish? Number two, does the current basically price bars have the bullish volume backing, as the volume indicator basically breaks the volume into bullish volume and bearish volume and shows which segment is in control. So now how should you trade Midcap Nifty for this expiry? Now if we break to, now as long as we're between 12,350 and 12,220, we're in a smaller box range and we can expect the thing to keep waffling about within this range. However, if we break 12,350, then you can think of a quick up move to 12,440 and 12,520. These two are the most important resistance levels, as they hold the most significance right now. By chance we break these two, then 12,600 opens. On the other hand, if we break 12,220 on the downside, then we can make a move to 12,150, which is a very important support, and if that breaks, then 12,040. So right now, how the Nifty Midcap is situated is right in the center. It can make either a 2% move to the top or 2% move to the bottom. But that will all depend on how it handles the 12,220 to 12,350 range, as that is where it's going to try to make its decisions, and that's where it's going to try to move. So a break of 12,350 is long, break of 12,220 is short. It's as simple as that in terms of option buying. Now what should you do as an option seller? Now as an option seller in tomorrow's trading session, I will sell both calls and puts, but I'll sell them at different intervals. I will most likely start selling puts first and then I'll enter calls next. But that is dependent on us having a flat open at around this range. If we open somewhere here, then I will end up selling both calls and puts at the same time. So the opening is going to decide whether I sell calls first, or whether I sell calls and puts together, or I sell puts first and I sell calls later. So now, if I decide to play as an aggressive option seller, then I'll go and sell P's below 12,220. So let's say 12,200 and below puts, and later on I'll go and sell calls of basically 12 520 and above, 12 520 and above if I'm aggressive. On the other hand, if I'm a cautious option seller, then I'll go and sell 12 150 and below puts and 12 600 and above calls. But as said, if we open around the closing of Friday and we retain that zone for let's say 15 minutes, then is when I will sell puts first and calls later. If we open roughly here, then I will sell both at the same time and just keep a profit stop like I usually do. And those who have watched my previous pre-market videos know that keep a profit stop and keep adjusting it as expiry. Decay happens fast for option sellers. So that is my option selling plan for mid-cap Nifty, and I've also shared my option buying plan of above 12,350 and below 12,220. Now let's take a look at the stocks. Now we are starting off with Adani Green. Now the people who are trading the Adani stocks will see one difference. Adani Green and let's say Adani Enterprises, both which have been covered today. Adani Enterprises tried to do a good comeback on Friday, but Adani Green couldn't. The only reason of that is due to Adani Enterprises being in the future and option space, while Adani Green is not in the future and option space. So Adani Green people have, if they want to go long, they have to go long in positional, and then they have to hold it for the required T plus whatever days, and that is because they don't want to get into that issue of they sold before time. So due to that is why Adani Green could not stage a recovery, while Adani Enterprises could attempt a recovery. Since Adani Enterprises, you could do an option buy, you could buy calls, or you could basically sell puts and benefit from the recovery. So that is the dynamic why one did better on Friday than the other, even though both, basically the whole Adani group has been hit by a scandal. Now, before we go into both Adani stocks, now when the Adani Enterprises, for example, stock did a recovery on Friday, I saw a lot of news channels in India and on social media keyboard warriors basically say that Adani's all is clear and everything, but I don't believe Adani Group is going to be a stock that you can say you're going to buy and you're going to hold right now, because there's going to be a lot of news coming out for it, and I believe the news is only going to get worse for it in terms of this, because what the Adani Group has come out and said that all the allegations are baseless. Now that is going to be very good for traders like me, for example, and the ones who want to go in and go out quickly. But it's going to be very nasty for the traders, for the investors who want to buy a stock and hold it, let's say for 3 months, 6 months. Right now is not the point for them to make an entry. They should make an entry once things settle down a bit. As right now, things are more for traders who want to enter today, exit tomorrow, and do that type of trading rather than sitting and holding. Now, Adani Green, when we'll take a look at it on the daily chart. Now, as long as Adani Green is between 1220 and 980, don't expect a clean move. This is a big box range, and it's going to, as the news comes along of yes, this has happened to the Adani Group, Adani comes and says, okay, I didn't do anything. Like I remember after the Hindenburg scandal, news came out, he had done with Bloomberg India, I think. Bloomberg Quick Take something that is on YouTube. He had done some sort of small videos showing how Adani Group is transparent and everything, a PR cleanup exercise. So I expect a lot more of that to come from them. So that, and then a lot of more negative news also to be flowing in. So that will cause a lot of movement between 980 and 1220. Now this is what is going to be beneficial for us, even though this is not an option stock. For us who are basically want to buy in and buy and sell, be within the, let's say, T plus 2 segment for the stocks. Basically buy and sell after 2-3 days. So this point will be beneficial for us, but for the common investor it's not beneficial. Common investor should only consider Adani Green a buy, either if it breaks 1 to 20 and starts trying to go up, or it reaches the support at, let's say, 800 and starts trying to form a base at this point. So in my point of view, if it breaks 1 to 20, we're going to 1350, the first main resistance. Not a big move, but it will be a decent move. It will be cleaner than what's going to happen here. On the other hand, we break 980, then we go to 875 and 800. So that's my pretty simple trading plan for Adani Green. Between 980 and 1 to 20, if you're not a savvy, quick trader, step out, don't bother with it. If you're a savvy trader, this is the point which will earn you more money than the stock going up for, let's say, 6 months. On the other hand, if it breaks 980, as basically I would say, as you say, equity, you really can't really capitalize on it in positional, as there is no way of doing so. So if it breaks 980, it will just fall to 875 and 800. On the other hand, it breaks 1 to 20, it goes to 1350. So it's pretty simple for Adani Green. Now let's go to Adani. And now, unlike Adani Green, how I looked at it on the daily chart, Adani Enterprises, I'm looking on the 3-hour chart. Why am I choosing the 3-hour chart? Because it's in the future and option space. Yes, these levels are based on the equity stock. I've not opened the Adani Enterprises futures chart. Why? Because we're in the last week of November expiry. So if I give you the levels based on the November option prices, then they're not that applicable to December. If I give you prices levels based on December prices, December future prices, then they're not that applicable in November prices, in the November expiry this last week. So if you take the stock and base the levels on that, they'll be 90% applicable for both the November derivatives and also the December derivatives. So now, according to me, now for Adani Enterprises, now as I will shade the lines a bit differently quickly here. Sorry, this one can stay dark, this one goes neutral, dash line, and then this is important. Now, how I will trade Adani Enterprises, if it breaks 2360, then it's a quick long to 2460 and 2550. This is a very important reason. This is basically the key resistance, the big daddy of resistances. So on the upside, there are basically 3 big daddy resistances, I believe: 2360, 2550 and 2700. These are the 2 important resistance, but not that significant. These 3 are going to really determine the pace of the whole dynamic of Adani Enterprises for F&O traders mainly, not for equity traders. As I said when I was analyzing Adani Green, Adani Enterprises will give much more of a move because people can capitalize it via equities, people can capitalize it via futures, people can capitalize on it via options. So you can earn from going short positionally, you can earn from going long positionally via many ways. So it's then naturally going to be a more dynamic stock. So now, as I said, those are the big important resistance. On the support side, each is a key one. That's why there are less supports and more resistance zones. Now, as long as it's between 2150 and 2360, this is a range that is only for intraday. Nothing positional should be considered within 2150 and 2360. If it breaks 2360, then you can go long to 2460 and then 2550 as a target. Main target 2550. If by chance it breaks that, then 2700 and 2850. But I believe for it to break 2550, it will need a lot of the volume to correct. If you see, when the volume started dropping, you can when the stock started dropping, you can see the volume went into the gutter. The bears had more than 90% of the volume control, and that is why it went into the gutter. And so the same, if it cannot get a bullish volume to drive it out of this range, then it will not be able to go here, and it will most likely go down this way. On the other hand, on the short side, if it breaks to 150, it's a chance to go short to 1960. If it breaks that, 1800. Reliably, due to what the position Adani is in, high likelihood if it goes to 1960, it will try to form a small bottom here for, let's say, 2 to 3 weeks at least. That's how I see it trading out. So now a recap on Adani Enterprises. My trading plan is simple: between 2150 and 2360, intraday plays only. Above 2360, positional long plays. Below 2150, positional short plays. It is as simple as that. Now, whether you want to do via option buy or option sell, that's going to be on the position front. That's going to be dependent on your risk. But if you're whichever way you're doing, do keep very tight hedges. This is a stock that can make a lot of moves, sudden, and you do not want to be caught on the wrong side of it by chance, and you don't have a hedge. So that's my trading plan for the two Adani stocks and the Midcap Nifty. If you liked it, then hit that like button and subscribe to the channel, and also click the notification bell. Thank you.